Good morning. Welcome to our webinar today. My name's Jo Edwards. I'm your moderator today, and this webinar is all about getting paid. Obviously, we are in very strange times at the moment, and I'm sure, like other businesses, you may be struggling to get paid at the moment. So hopefully, our presenter today is going to enlighten us on what we can do to solve that problem. We'll have a live Q&A session at the end of the presentation today. So let's just go through a couple of actions in terms of using the Zoom features. Hopefully you can all hear me. If there's any problems, then select your audio settings and just test your speakers. But I'm sure if you want to use the chat to let me know that there's a problem, you can do. As I said, with the Q&A session that we have today, our preference is you use the Q&A option on your toolbar of Zoom. That will open up the Q&A panel. Please put your questions over to Neil, and depending on time at the end, we'll try and answer as many of those live as we possibly can. And if you do need to leave the meeting for any reason, you can just click leave and just rejoin using the link that you've come in on, basically. Right, so at this point, I would like to introduce Neil Driver, who is a partner at Davis Grant. As I said, Neil's going to be talking about getting paid. So at this point, I'm going to hand over to Neil, and I will see you at the end of the session where we'll have a look at the questions and answers. Over to you, Neil.
Thank you very much, Jo, and thanks everybody for making time to listen to this important webinar. We appreciate that these are in difficult times with great uncertainty and concern for everybody. But we want you to know at the outset that we're here for you, albeit partly remotely, to give whatever support we can to get you through. This is one in a series of webinars that we'll be presenting that help businesses with your day-to-day practicalities, often outside of traditional tax and accounts advice. As a proactive practice, we focus on the real issues for our clients and help with practical solutions and implementation of them. So with this core purpose in mind, we're here to share with you some practical things you can do to minimize the downside on your cash flow at this time. But before we kick off, I just want to give you a thought for the day. When a recession does materialize, and we're either in or very close to it hitting quite hard, I feel, many experts agree ready cash is the oxygen that every small business owner requires to survive. I think that's pretty much speaks for itself, and that's the focus of what we're going to be talking about today. So here's the agenda. I'm going to be talking about the mindset just to start off, how we should be thinking at the moment. Going to look at your debtor systems, including perhaps if you're still working from home, how you can cope with that. Look at lessons that we can take into the future to make things better. Outline support that's available for you. Try and drill down onto your next steps, and then we've got time for question and answers at the end. So, with our thought for the day in mind, you should never take your eye off of the cash flow. And before we talk about strategies you can adapt and adopt, let's talk about three mindsets that you need to have. Firstly, you need to be empathetic. I'll come on and explain that a bit more. You need to approach your debtor management with what we call backbone and heart. And remember that it's okay to sell in these times as long as you're solving problems for your customers that they have right now. So remember the analogy of the oxygen mask in a time of emergency, and you need to put your own oxygen mask on first. If your business fails or falls over, then no one wins. So a bit more about being empathetic. It's not, of course, as simple as saying, right, put the oxygen mask on me, customers have got to pay or we won't help them. We've heard some horror stories of businesses who are stopping credit and ramping up their debt collection without any thought for how their customers are coping. And we're sure this isn't applying to you. But before we work out the best way to keep cash flow going, we need to have a framework. And this framework starts with empathy, which we define as the ability to see things from your customer's perspective and be prepared to do something about it. So this is the idea of giving customers options, how they might be able to pay you. So moving on to backbone and heart, as long as we're being empathetic and giving customers choices of how they can pay, we can then start talking about how they are going to pay us. So you need to have a backbone and a heart. What we're saying with that is that it's okay to be paid for the value that you are providing. You're running a business, they're running a business, and it's equally challenging for everybody at these times, but there's no reason not to go and seek the money that you're owed. But the heart part of it is link the reason that you're chasing for money and that you have provided them with services to what you're actually doing for them, and kind of let them consider the options you've got for payment. So you might be offering them a phased payment, you might be offering them more payment up front, and be flexible with the approach that you've got to them. So I'm also advocating that, of course, we all need to sell, and you've got to keep turnover going, but sometimes it's a bit difficult to put that in perspective when times are tough. But I just want to share with you this something called the spin cycle, and understand a bit about selling, or the mindset at the moment. So as long as your product or service is solving a problem for your customers, and as long as you're going to be paid for the work that you do, then it's okay to sell. So the spin cycle is a line of questions starting with situation questions and then moving through to problem questions. So I'd be easier if I illustrate it. So during lockdown, one of the things people were worried about with their hair, most people were having a bad hair day, and various people were cutting their hair at home and so on, or just letting it grow. But if you use that as a situation, I'd illustrate it with how it might go at a hairdresser's. So they might say, well, how did you cope with all the time being at home during lockdown? Were you spending a lot of time on FaceTime or Zoom? So it was just trying to get the situation that their customer was in. And then once that chat is finished, moving on to the problems they had with that situation. How did you feel every day? Most probably each day we're starting to feel like a bad hair day. So we're trying to link their situation with the product that we're trying to sell. And then giving a bit more impact, saying, well, how do you think you're going to be feeling about it a month from now or 3 weeks from now? And that's then leading on to the next step question, which is, well, we can't be certain when you'll be able to be in, but why don't you book now for another makeover or haircut in 3 weeks' time? So just trying to have a bit of fun here, but just trying to illustrate a bit of empathy and a cycle of how to position what you're selling and linking to people's situation, the problems they've got, the impact that you can have on them, and then trying to get them to commit. So having spoken about mindset and empathy and backbone, just want to talk a bit more about your debtors system. Best practice, we've got some guides and scripts to share with you, and talk about your credit control services and how you actually do credit control. So best practice for debt collection is really nothing should change apart from dialing up your empathy. Now, when I say nothing should change, we've got to be far more aware of what our debtors process is. But initially, we just want to tap into our customers on a bit more of an empathetic basis. So when you're phoning them or speaking to them, tap in to their particular circumstances, and you can tweak your process just for the customers who are perhaps struggling more than others. So remember, not everybody's at great risk here. Some businesses are doing better than others, but either way, it shouldn't give them the situation we're in shouldn't give them an excuse not to pay. You've done the work, you've supplied the product, you're running the business, and you need to be paid. That's the underlying message. You've got to be using a paperless system now. If you're still sending out paper statements, paper invoices, that's really not the way to be going right now. You've got to look at your accounting systems. There's some fantastic cloud-based systems now. And I suggest if you're not doing that, if you're still sending out paper, that's got to be your top priority to change. And those that weren't, a lot have changed over the past few months, but there's still some more that need to convert. Best practice for credit control is to have guidance notes for whoever is responsible for the credit control and your debt collecting. Things like flowcharts, scripts, and templates to deal with the process of what they say. You can then standardize what's happening and get a better result. We've got some of those to share with you, and I'll go through them in a bit more detail shortly. Many problems we have about debtors comes with businesses is because they don't have great systems in place around giving credit in the first place. And we'll talk about credit checks and possibly outsourcing and who's going to deal with that as well. So with guides and scripts, we've got some handouts at the end of the webinar that will be available to you, where we've got some scripts and a credit management guide that will help you review and look at your credit control process. So, there's a guide that includes looking at your terms of trade, looking at your billing and payment process. And we've also got for you some call scripts that look at initial call, follow-up call, third call, and just scripting suggestions for what you should say, which incrementally increase the severity of what's being asked for. And various other things. So make sure that you tap into that and ask for them at the end of the webinar, which should be part of the follow-up. So credit control, of course, key to cash. But remember that credit control is not just about following up your debtors once you've made the sale. It's a complete system from when you take a customer on through to when they pay you. We find that having a dedicated credit controller is always the best way to go. If business owners are doing credit control as part of their function and they've not got another team member or even outsourced it to somebody else outside of the business, it often gets left behind and falls short of where it should be. If you do outsource or whoever you use internally or externally, it's essential that the business builds a really great relationship with them so they can understand what the values of the business are, and that's transmitted through the credit control and debt collection process, including the style of communication and the language that you use. So your customers have got a continuous process, and they can feel the empathy and they can feel the understanding of the business all the way through. But if outsourcing is a way that you're going to go, or whichever process you do, that credit control call, that debt collection call, is not what I'm calling an ambulance at the bottom of the cliff. You can't suddenly put in some severe credit control management processes, or get someone to hammer on for businesses that aren't paying for you, because the damage that can cause for the business could be quite severe, and it could also waste a lot of time. So that's why we've developed some content for you to help with that. We've also got a cash flow management coaching service, which is a great way to drill down even further into that process to make sure you've got those best systems in place and free up your cash flow. And you've got to, within the credit process at the start of a business, you've got to make sure that you provide the right level of credit to your businesses. Now, there's a lot of providers out there at the moment. Here's some people: Equifax, Red Flag, Credit Safe, Experian. They're all providers that you should tap into to credit score and give limits for credit that you give to customers. If you are invoice financing, then that might be part of your process already, but often customers that are not, and if it's insurance backed, you might be doing that, but those that are not tend to leave this out, and it's a really important thing to make sure that you understand who your customers are and what amount of credit you're giving them in the first place. So we've talked some things about best practice with your debtors and not to avoid working for people who can't pay you. So we'll talk about what you need to do going forward that can maximize your own cash flow. Some of these concepts you might have heard before. So really, I encourage you to take notes and jot down the actions you need to take, and those actions should really form part of the feedback at the end of this process. So we're going to look at what I call your cash conversion cycle, which will explain a bit more about how the cash washes through a business. Then also the general business cycle of how profit is generated and flows through a business, as a background to 7 causes of poor cash flow. And then we'll look at how you can get some quick wins from various elements going forward, look at bank and government assistance that's available at the moment. So these are all actions that you can take going forward. One of the most important ways to improve your business is to shorten your cash conversion cycle. Now, it's a little bit of a complex slide, but I'll take you through it. And what we're looking at is getting your cash in quicker. And what's super important in times of crisis is that businesses have got to speed up their cash conversion cycle for all. I mean, it's important to pay suppliers when you can, so that keeps their cash flow going, and that generally helps the economy for everybody. And we don't want people to suffer as much or more than is necessary. So I just wanted to take a look at this example, which is set up as a wholesaler. The wholesaler buys stock from a supplier, and on average they pay the supplier 45 days after buying the stock, which is pretty reasonable. Stock doesn't always sell when it comes into the warehouse. Some sells quickly, others takes longer, and eventually some has even got to be discounted to move it on because it wasn't a great purchase. But on average, that wholesaler is holding on to stock for 60 days. When stock is sold, the credit terms are for given out to customers. Some stick to them, some don't, but on average it takes 60 days for a customer to pay. So if we look at the cash conversion cycle, you've got 60 days average stock holding and 60 days to get paid by customers. That's 120, but you're keeping 45 days back as credit from your suppliers. So that means the net amount of the cycle is 75 days for the cash to come round within this business. So I just wanted to break it down, and in difficult times, or any time really, you've got to make sure that you've got a plan in place to shorten that cash conversion cycle as much as possible. And it's a process that recommends you do as part of your business planning exercises and cash flow planning. So you can look at numbers from your most recent management accounts, and we can work through that with you to look at the numbers for you and calculate what your cash conversion might be. And there you want to really look at how you can shorten each element of that cycle and free up more cash. Now, a lot of this is intuitive for business people, and we all know it's pretty, you pay your cut, you make that cycle as quick as possible, and you therefore have more cash to work with. But just as a general example, if you're owed £50,000 and you've got a £500,000 turnover, on average, a 10-day reduction in your cash conversion cycle could free up nearly £14,000. And all that makes a big difference, which I'm sure businesses can do with right now. So we recommend that you incorporate a review of your cash conversion cycle as part of your plans and forecasting to free up as much cash as possible. And we'll talk about those options at the end. Another thing I just wanted to quickly talk through, as well as the cash cycle, is your general business cycle. So it's important here to know that as well as your cash conversion cycle, you've got to make plans to maximize your profit at the same time as you're maximizing your cash flow. The two obviously work hand in hand. So on this diagram, if we start at the top, as a business owner, you introduce cash or there's starting cash for the business to buy assets and buy stock. You might also borrow to do that, but these assets that you're funding, whether that's machinery or stock or whatever it is you're using within the business, are used to generate profit. How you increase profit to improve your revenue or sales is also down to increasing your margins and your overall efficiencies or trimming overheads. So now's a very good time to be looking closely at potential new revenue lines and pivoting your sales so that you can avoid losing customers, just changing the type of products that you're providing or services, just moving them slightly to adjust to what's needed at this time. And at the same time, you've got to be looking at your margins, how you can improve efficiencies, better purchasing, reduction in errors and wastage, or simply not providing products or services that have got a poor margin. So all these factors are important within the profitability of the business, which then converts into cash. So once you've got your profit, you need to turn that into cash. Profitable businesses can and do often fall over and cease at all kinds of times, but more at the moment than others. So you've got to be looking at how you maximize your cash flow using the strategies that we're talking about to get paid quicker, reduce stock or work in progress, or negotiate better payment terms with your suppliers. Now's not the time, as we've said, to be lenient on debt collection, and you've got to be very careful about reordering stock. If you can operate with less stock or less stock items, work out a way of doing that. Other ways of improving cash flow are through better terms with your financiers and your banks. And we'll go into options about that in a little while, as well as some tax breaks and ways of smoothing out payments, which we'll touch on to shortly. So that's really going around this circle. I'm just trying to illustrate the way that the cash moves around and is all part of the profit and the business cycle. So this slide, I'm just going to share 7 key causes of cash flow that we come across quite a bit. The accounts receivable progress stands out for itself. Accounts payable, if you're paying people too quickly, obviously that's a drain on cash. Inventory and work in progress. too high stock levels. If you're a service company, not billing out quickly enough, not finishing projects quickly enough is going to hold up cash and prevent you getting that into the sales cycle to get it in at the other side. If you haven't got the right amount of, if you've got borrowings and you've got debt, is that the right structure? Have you got the right type of borrowing? Are you using overdraft when you should be using asset finance? If you've bought a van or something, have you bought that in your overdraft, or have you got a specific loan for that? Sometimes businesses are pushed into a certain way because they want to make quick decisions and quick actions, and they end up having the wrong type of financing. Make sure that that is reviewed, and you can always change things around. Overheads being too high. I think most businesses at the moment are going through a process of looking at their overheads, but that is vital to the overall cash flow of a business, as are your margins, and of course sales, and improving both of those are also key. So there's 7 rough key causes of cash flow are on that slide for you there. So how can we bring all of these concepts together in a meaningful way in the current climate and moving forward? So you've got to revisit your credit control process, possibly outsource it when you can. And as I've said, you've got to be careful if you suddenly enlist the services of a credit controller or debt collector with customers you know that are unlikely to pay because the risk to your brand is great. So if you've got a credit manager, use them even more. And if you need to move things on to a debt collection agency for those that are not paying, don't be afraid to do that, but do it with empathy. If you haven't got an outsourced credit controller, it's something that can be recommended to free up your own time as part of a more longer term commitment to overall credit management. But in either case, you're going to have to deal directly with customers who can't pay. But remember the points I made earlier about being empathetic with them, and use the guides and scripts that we're going to give to you at the end. Look at your terms of trade and your proposals. Make sure that you don't start off the business relationship with poor practice that's going to come back to bite you in the future. You can't do much about what's happened in the past, but you can change things going forward. We've got plenty of ideas to share with you on a one-to-one basis, on a cash flow management strategy, coaching service. But what you adopt here needs to be tailored for your own business. But it's important to set out when you quote, when you start off, you set out the basis on which you're expecting those people to pay, and therefore you can chase up on that basis. Don't be afraid to do it right at the outset. You've got to look at your billing process as well. If you can get customers onto a repeated or automated invoicing basis on a regular way, so those invoices are going out regularly, then you're not going to be having your system held up to get them out to actually chase for it. Again, software can help with that very much more now than it has done in the past. See if you can get contracts with your customers and clients for more regular invoicing, or deposits on acceptance of a proposal, or interim progress payments if that's more appropriate for you. And if you've got additional work or out of scope work, make sure that you communicate that early and get an acceptance from them for that before you do the work, so that will avoid a complaint or an invoicing query once you kind of invoice them at the end. We don't want to have what we call ambush invoicing, where you've done some work, that client isn't sure, and then you invoice them at the end. That's not the best way to get paid quickly at all, or to retain your relationship with them. If you've got a published price list, or even one that you work on internally, check that, see the last time you revised it, check your margins are what they expect to be, and they flow through to that published price list. So if you've got excess time now, perhaps you should look back over the last few months and review in quite a bit of detail the sales that you've made, and work back to the margin that you're actually making, because you're likely to have changed costs from suppliers, as well as possibly change pricing to customers. And you just want to review what is actually happening now to what you're expecting. I've mentioned automation or cloud-based technology that helps, and now is a great time to look at that, to see if you can automate as much of your process through the whole of your cycle as much as possible. The integration of various processes through software now is really amazing, and we're achieving a lot of time saving for us as a business, and also with our clients, in constantly chipping away at the way things can be done. And with remote working, that's even more important, to get things in the cloud or online, so that you can be as slick with that process as possible. You know, if you can make gains within automation, within the cash flow cycle or within the business cycle, you're shortening those timescales all the time, and all of these actions will flow through into improved cash flow, which is what we're after. So last but by no means last, have a look at your management controls and processes that you've got around spending and invoicing. You know, for example, set limits around what stock or products can be ordered, be tighter on that, get authorizations where you might not have previously done, and look at how you might be able to reduce your levels of stock or work in progress, and generally the efficiency within your operations. But whatever you do, don't keep working for customers who don't pay. You're running a business right now, and what you've got to do is reduce that risk wherever you can. And the worst thing is to be providing services or goods for customers that don't pay. Not only have you got the big bad debt, it's a waste of time and effort that you can't service those that do. And that's the same with items that are on a low margin. You're just chasing money around and not really getting anywhere at all. Onto business finance and banks. Often one of the highest overheads in businesses is the interest and repayment costs to financiers. If you look at the capital that you're repaying on loans, it can be a massive drain on cash flow on businesses at the time. Now, there have been various initiatives around to help with this, but I just thought it was worthwhile spending a bit of time looking at what was around, general things to do with finance that might be able to help you within the cash flow improvement. Some are more available to some businesses than others, and that depends on a lot of factors. As we all know, banks change their requirements quite often, but it's worth a few minutes to refresh on these, as some can go unattended for too long. What have we got here? So think about temporarily increasing overdraft facilities. That will be short term, and it is possible to do. All of these, there's going to be the need for security. Often with a limited company, financiers want personal guarantees from directors. At the moment, that is obviously a bit more delicate than normal, but the banks look on it as a personal commitment from the directors, and it's often something that you're going to have to comply with one way or the other. So it's something you need to keep in mind with all of this. Look at, review and extend your credit with suppliers. See if you can discuss with them what's going on. And I suggest you do that in a proactive way, rather than just wait until an invoice is ready. If you can reset your credit limits with your suppliers in the same way that you might be doing with your customers, then everybody knows where they are and everybody can work with what's intended, and you won't have to field chasing phone calls from them, and everything will run a lot smoother. If you've got invoice financing arrangements, invoice discounting, factoring, look at those. Those can be very costly. There are lots of alternatives around, even at the moment, and look at both the interest rate you're paying and the service charge that go on the back of it, not just one and the other. Some of those are actually folded into C-bills now, so you can get a really good holiday of interest for up to a year under that scheme. It's very worthwhile having a look at. Check your asset finance. I gave the analogy earlier about buying a van using your overdraft. That's not the right way of doing it. See what assets finance is available for your assets. If you've got large machinery that is worth a fair bit, you may not have that. If you've had that for some time and there's still value there, there might be some equity left in those machines that you can leverage on and release, provided you can service the loan going forward. So that's an area to look at. Generally, loan repayment holidays, deferrals, any way that you can speak to a financier to ease the pain, so to speak. Again, it's better to be proactive with this than wait until you're really in a hole and either can't pay or you've got nowhere to go. So have a look at those. And as well as mortgage holidays, business credit cards. They are useful, but of course, credit cards are very expensive. And generally, I tend to advocate using credit cards for very, very short-term finance, almost like an overdraft, and paying them off every month if you can. If not, I would suggest that is really a last chance saloon, but it does help short-term cash flow issues if you can get a credit card issued through the business. There are tax angles if you use a personal credit card in your own name for business purposes. Talk to us about that. Really, the business should not make those repayments directly. You should make the repayments and the business reimburse you. There's a few nasty tax angles there to be aware of. And within financing, as most of us have been through, I'm not going to go through all the COVID help that's available now, just to highlight a few that are in play still. The C-bills, the business interruption loans, end in a few days at the end of this month. There is just about time to get applications in. If you need help with that, we've got a great finance platform that cuts across not only C-bills, but all kinds of lending that is very active at the moment. Doesn't leave a trail initially on your credit history. So please ask if you need any help with that at any time, actually. Bounce back loans up to 50,000, they're open a bit longer than the C-bills, up to early November. There still are some discretionary funds around. There's a big business innovation fund of match funding, but there's quite tight criteria for that on the innovation side of things. We're making more tax payment plans. They're not formally out there yet. There was the deferment of the first VAT quarter, which of course unwinds at March next year. And businesses might be looking at payment plans then for that. And generally, we're making plans over a number of months for VAT, PAYE, and corporation tax. So they are available, and the revenue are being quite flexible at the moment. Furlough, of course, ends the end of next month. We'll see what happens with that. Maybe it'll be replaced, maybe it won't, who knows, but of course that's very much in the press at the moment. There's more details of all of this on our business recovery area on our website, so please dial into that and have a look. But that was just a summary of where we are at the moment. Next steps. So we've set out for you mindsets that you need to have in these difficult times to be empathetic, have a backbone and a heart around your debt collecting, and avoid shying away from selling. That's perfectly okay. We've shared best practice about credit control, debt collection, and given you a guide and scripts that you can use are available for you. I've covered how to free up as much cash flow as possible by looking at your cash conversion cycle and your business 101 model, explaining how it flows through there as well. We've looked at 7 causes of poor cash flow and how you can get runs on the board quickly, implementing improvements to your cash flow, and looked at the support that's available from the bank and the government at the moment. So there's a lot there. It's essential that you decide what you're going to do. As we said before, clearly doing nothing is not an option. Now is the time to put this oxygen mask on yourself and make a plan to get through and improve. Even if the plan can be drastic, you're better off to make really harsh decisions sooner rather than later to preserve what cash flow that you have and what cash reserves you've got now. Part of that planning surely has to be surround yourself with experts, and within that we are always here to help you. But remember, focus on what you can do. And with this in mind, we've got a credit control guide and scripts for debt management that you can have sent to you at no cost from us. So at the end of the webinar, indicate whether you would like a copy in the feedback survey. But I want to do now is share how we can help you even more. There's some offers here for you to pick up on. So we do want to help you, and we are helping clients more and more in these times. Firstly, highly recommend that you work with us or on yourself to complete a cash flow forecast. They're now relevant for you as a business more than ever before. Sometimes they're just used for finance from the bank and business owners don't look at them or take notice of them. Now it's really quite vital to look at that over the next year or 6 months, even on a short-term basis, and then compare month on month what you're doing and adjust it going forward. It's really important to take all these issues we've spoken about and really predict what's going to be happening to your business going forward, so you can make sure that you've got it financed properly. Many of them are being used as a support for finance applications. And when we help you prepare a cash flow forecast, we can share with you ideas how to improve it. Combinations of finance, governments and tax assistance, and all that goes through the process of getting a cash flow forecast done. It helps improve and identify where improvements can be made. If you want to pick up on a cash flow management coaching session with us, we'll be able to show you how to implement the ideas that we've got in the forecast into your business. It's an opportunity for us to show you the full extent of what you can do in the business. And we're confident that once you see the value and the improvement in your cash flow, you want to work with us continually to keep on that ongoing cash flow management coaching. But at this stage, we're just saying commit to one session with us. Also, with all of our clients, we recommend strategies to complete what we call a business review. Many of you are well on your way with that, working with us, and we've received fantastic feedback about how helpful that process is. So if you haven't yet done it, now is the time to look at it, and it will form a great foundation on which to build your cash flow improvement strategy. It looks at the key issues and drivers in your business and helps set an overall roadmap for you. In times of rapid change, this is more important than ever. And it's important to keep focused on the issues that really matter and make a difference. And you've got a couple of options here. The first one is an online service, and that suits people who feel comfortable in preparing the plans themselves and are not inundated with other things to do right now. We look at various areas in your business, and we firstly send you a pre-meeting worksheet for you to complete. And then you meet with us online so we can go through it together. And that session will take about 60 minutes. And we believe that throughout the whole of these processes, combining your expertise and our expertise will result in a far better plan and implementation for you. And to support you at the moment, we're offering you that session for free. The risk is with that first approach is that with everything else going on right now, you may not get around to doing the plan. And so the second option is that we meet in a more structured way to identify and discuss those key issues and go through the plan in detail to make sure it actually gets made and implemented. But we appreciate it might be difficult to commit spending money at a time like this, in a time of crisis. And that's why we've made the cost of these options discounted from our normal fees. and we expect through a combination of business planning and forecasting and the management and coaching, the benefits that come out of that will be far greater than any fee. But more importantly, what we're about is trying to help you in a way that is relevant and as quick as possible. So that's it for the main presentation. Just going to pick up on any questions, and Joe's going to help coordinate this at the moment.
Okay, thank you very much, Neil. So we've had a couple of questions put forward before the webinar, which I'd just like to run past you. One interesting one is what are your recommendations for the top 3 things that we should do now?
Okay, Joe. Top 3. I think paramount is to look at your whole sales and credit control cycle. I mentioned that just the credit control is at the end of that cycle. It's important to make that as slick and as good as possible using the scripts and processes that you can get from us. But I would say wind that back to the beginning and look at the basis that you are doing business with your customers and set out in your proposals and quotes what your credit terms are, get them to agree to that more formally. And therefore that then alleviates any issues you've got in chasing for money, because everybody knows where that is. And hand in hand with that, give customers as many options as they can to pay you. Bank transfer, take credit cards, maybe direct debits, split payments. If you do split payments, then having a direct debit system on the back of that gives you more control as to how you get the next parts through. So I'd look at that whole process as one option. Secondly, you've got to take up all the options that are open at the moment from the government. Lots of businesses have, but the way the economy is going, those that may not have been so keen initially might want to take it up now. The CBILS is ending very quickly, need to get in the next day or so with that. But look at make sure you've taken all the government options that are available to you. And thirdly, I think you've got to review your overheads. That's a constant thing for businesses. If you've not been through that process, go through that and look at your overheads in conjunction with the margin that you're making on the work that you've done over the past few months. Things have changed quite a bit, and you might just look at the margin you're making when you get your management accounts through, and that's another key thing you should be doing. But not all businesses actually review the work that they've done until they come to their year-end accounts or a longer-term thing. Now, in order to generate as much cash as possible, you've got to be making as much profit as possible. So look at what you're doing. Look at the margin you're making on your stock or on the services you provide quite closely.
Okay. And also, can you just remind us, when it goes back to that government support, what's the how long have we got left to apply for the CBILS loan at the moment?
Okay, yeah, well, the CBILS loan applications have to be in by the 30th of September, so that just gives us several days left to go. The process can be relatively quick if you come through us and the platform that we use. If you go through traditional high street banks, the process can be quite a bit longer and the documentation they want can be quite a bit higher. So, these are for loans up to a quarter of your turnover, and it's important that you act right now. Our contact details are at the end of this webinar, and please do get in touch if you want to consider getting finance.
Okay, and you mentioned at the end there about the business review that you offer. So, what are the real business benefits of taking that?
Okay, that's an interesting question. The real business benefits of taking that is that it drills down into where your business is and where you want to be going with it, and makes you kind of take a bit of a pause and refocus on what you're actually doing. We look at questions and issues outside of your more traditional accounts and tax areas, and we look at the business in a lot of detail and review what you're doing with your plan going forward. You may have had a notion when you set up the business, you haven't rethought it, or even 6 months, a year ago, what your plan for the business was. But at the moment, we're finding it's really valuable to rethink or confirm how you're taking that business forward, either having taken a pause or a sideways step, but having that focus and having a plan and an implementation process around what you want to be doing with that with your business is highly valuable, and that's what this process does. Okay,
thank you. Well, that effectively brings us to the end of our webinar. Thank you very much, Neil. Really interesting. As Neil's mentioned during the presentation, there is some collateral that we'll be sending out as part of the follow-up process, and we have recorded this webinar, and we'll make an on-demand version available on the website if you'd like to watch and remind yourself of some of the really good points that you've made. I'll hand over to Neil now for some closing thoughts.
Okay, thanks, Joe. So just a parting thought for you. Stephen Covey, very well-known business guru, if you like, said that when you show deep empathy towards others, their defensive energy goes down and their positive energy replaces it. And that's when you get more creative in solving problems. So we're just linking back to the start of the webinar about thinking deeply about how you're dealing with your customers and suppliers to solve the cash flow issues that we've been talking about. So let's make sure we approach our own cash flow challenges with empathy to get through this difficult time.
Okay, that's great. Thank you.
Thank you, everybody, for attending and participating. As Joe said, please complete the feedback form, and there's my contact details for you on the screen.
Thank you very much.
Thank you.